Welcome traders to another episode of Executive Talks by AC Capital Market, where we bring professional insights from industrial leaders to you. Today we have Eddie Tofpik, Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International. Eddie, thank you so much for coming to Executive Talks.
Thank you very much. I'm very glad to be here.
Thank you. We understand you have very extensive knowledge and nearly 40 years of experience in the technical analysis and market analysis. You've also worked as the chairman at the Society of Technical Analysts, a foreign exchange dealer and a futures broker at Morgan Stanley, as well as overseeing warrants at the London Metal Exchange. You've even worked as an executive director for a movie that was nominated and have received the Best Directors Awards from the Los Angeles Film Awards. So this is just amazing. Could you tell us a bit more about yourself?
Okay, I started in financial services at the age of 19 when I was one of those what I call Thatcher's children, which was there was a portal at that time which allowed us to go into the market, people from a more working class background. And I started out by becoming a warrants clerk for a metal trading company, which is literally counting the warrants and the insurance, the rent on those. But I saw what the dealers did, and I wanted to go onto the dealing desks, and eventually ended up working as a bullion dealer, and then on to futures. I went onto various futures markets. Whilst there, I actually was introduced to technical analysis by one of my bosses, and I really liked it. I suddenly realized this is something I can visualize and see. That was in 1985, and I have gone on from there. I ran the foreign exchange desk for ADM Investor Services International Limited for about 27 years. And then about 6-7 years ago, I got the opportunity to set up a technical analysis unit within ADM, and I have done so. So in that time, I've also become chairman of the UK Society of Technical Analysts, which is the oversight body for technical analysts in the UK. And recently, I've become a director of the International Federation of Technical Analysts, which is like the United Nations of all the societies around the world. And here I sit and I do technical analysis every day for customers, friends, and anybody who's interested in the markets I cover.
Simply amazing. Thank you, Eddie. And you know, apparently you are a highly recognized figure in the financial markets, but also in the technical analysis community. And coming to 2024, we are hearing a lot of talks about rate cuts, and we're also seeing a lot of record highs, especially in the U.S. markets. Could you share some of your insights from the technical side for us?
Yeah, would you like to look at a chart of the E-mini S&P future? Would that be okay now?
Yeah, that'd be fantastic. Please do.
Okay, I'll show you my screen. By the way, anything I say now, these are my own personal thoughts and words, not those of ADM or any other part of Archer Daniels Midland. So I'll show you this. This is my chart for the E-mini S&P. I hope you can see it now. I'm sorry if it's looking a bit busy, but that's because the market is busy. The main recent feature is obviously the new highs, but why is it making new highs? And the primary reason is very simple. It's following along. Some would say this is a bull channel. I'm more interested in it being a wedge. It got breached on 2 occasions, maybe 3, and there's a little one there as well. But overall, it's coming within this wedge pattern. When the break happens, which could be up or down, when the break happens, then I can give a measurement on that pattern, what will happen next. But at the moment, it's moving along nicely within this wedge pattern. You can see today it's roughly 51.95.5 and 51.23 on the downside. That's for the E-mini S&P future. That's the front month. The only thing I'd say about that is that I did a video earlier this year of W.D. Gann's work on the markets, and W.D. Gann was a technical analyst. He died in the mid-50s, so he's well before I was even born. And he came up with a thing called a financial timetable. And I urge you to have a look at the financial Gann, G-A-N-N, Gann's financial timetable. He has this year as being a very bad year for the market, and I would be cautious about anything. I've made a video about it. Other people have made videos. There's lots of written stuff about it. You can actually look up and find the table from the 1930s. He did up to the 80s. He only did as far as that. He didn't think he was going to live any further than that. But people have extrapolated up to the modern day, and it's not looking good at the moment, I'm afraid, if you're a Gann follower. But at the moment, the reason the market's moving higher is literally because of this wedge pattern, and it will continue to do so. But there is a finite time of it, and it will get very, very messy up here, probably sort of like late March, early April, if it does carry on along it. And also the chance of a false break will be much, much more increased in that particular instance.
Very cool. Well, I mean, yeah. So the Gann theory, and I think people in the technical community have more or less heard of it. But this is the first time we're seeing this upward rising wedge pattern is actually leading up to 5,400 points or so, and things could turn south somewhere in between here, right, Eddie?
I would be very surprised if this lasts beyond sort of like mid to late March, because it's too narrow a range at that point.
Too narrow.
Yeah. You look at the movement there in between, would be too narrow a movement. I'll stop sharing now, unless you want me to carry on showing that picture.
Yep, please. It's fine. Please keep sharing the screen. They'll be fine. Oh, that's all right. That's all right. It's fine.
I'll put it back on again in that case. Hold on one second. There we go.
Awesome. Thank you. So and that is, very, very it's a brand new perspective. We're not seeing this from any investment banks and from any major media financial media outlets. They're basically saying to revise the end of year target higher, and they're talking about the election, etc. But from technical point of view, this is something new, and like you said, we urge the traders to look into the Gann theory and this this brand new perspective. So and I guess the second question is around the US dollar. Being a global reserve currency, traders and investors around the world are waiting for the dollar to go softer after the Federal Reserve finally pivots. And lots of talks about the CME. There's a Fed Watch tool, and people are talking about when that the rate cuts would actually happen. And the reason for that is because essentially this will benefit assets that are priced in the dollar. So what are your views on the dollar? Can you see any clues or hints from the technical side?
Right, I can look at the let's have a look at the euro against the dollar. That's the busy chart for the euro dollar, and frankly, yes, we've had a longer term move higher, which is this green expanding wedge bull channel sort of thing there. You can see those two green lines. It broke on the downside. It looked like it was forming another wedge, but then it stopped. So overall, the market is constricted between these two areas. So roughly between about 108 to 109.50. There's nothing in the charts at the moment which would indicate a specific move down or up. We have potential here for what's called a golden cross of the medium moving average over the long moving average. So that's that mauve line over the gold line. But it's not that great. That's a lagging indicator, and I wouldn't necessarily be that pleased on it. That's not really looking that great as a movement. If I can show you the dollar yen, though, I think that's much more interesting. So if I move over to dollar yen. Now here we have some long-term patterns. There are two bullish, what I call pitchforks. There's the bullish shift pitchfork, this one in purple, 1, 2, and there's a third line up there. They were constructed in between February 22 and January 23. And you can see that they provide the overall upside resistance and lower side support, and they give the rough bullish angle of attack of the market. In the meantime, there's one also between July, the red one, between July and January, late December. I think it's actually, what day was it? It was, late December. This one has been interesting because you can see it's been providing resistance all the way since mid-January, and still does. Now today it runs through at, where are we? 150, 166. That's the resistance. That's why it's being capped at the moment. It's an upward moving line, so yes, the dollar will go stronger against it, but it's tempering it. It's keeping it under pressure. Now, the only thing that's been interesting is that last week we had a weekly key reversal down, which is a higher high, a lower low, and below two previous closes on a weekly basis. That's usually indicative of potential for a move lower, but there hasn't been any follow through. In fact, the market is really starting to get a little bit boring. It's moving away from the resistance and it's just going sideways. So everybody's sitting on their hands and not doing a hell of a lot. This had been and still is until this breaks. These two pitchfork lines, the purple and then the red lines, they will give you the bullish angle of attack of this market, and they work until they're broken. That's one of the great things about these ones, these specific patterns. This red one is an Andrews pitchfork. The purple one is a shift pitchfork, a modified shift pitchfork. That they work until they're broken, and then they stop working, and you have to use something else. But at the moment, they look mildly bullish. We're going to see a potential, I think, for possibly a test up to the 152 area, but it will be later on. I think it will be probably late March if we do try up that high. At the moment, it's just going sideways for this past 2-3 weeks.
That is amazing. I mean, the Andrews pitchfork and the, you know, you pointing out that
the shift pitchfork, yeah,
the middle line there and keeping that the candles under pressure.
I drew this back in December. So yeah, so I drew this. This was, you know, you can see the points. That's November. That's July. I drew this back in December, and I said, okay, that's going to be the bullish angle of attack of the market.
How could you
lo
know?
And behold,
sorry, go ahead.
Ever since middle of January, it's provided resistance.
So back in December, how did this pattern, before this wasn't formed, how did you know it could form into this pitchfork pattern?
Well, it formed a low. You need a low that's low. You need a low, then a high, then another low, but the low here has to be above the previous low.
Right.
And then you can apply an Andrews pitchfork.
A
shift pitchfork is a derivation of it. It's a shallower one. But this provides the overall bullish angle of attack. And you can see, I mean, I can't put anything here, but if I literally drew this when it started going up here, I said, okay, that's it. That's where the resistance is. That's where the support is underneath. And it's quite good because there's two together. And you know this, the purple one worked because it worked in January. So that works. And that was drawn back in January 2023. So it's over a year old, this purple one. And it worked. It held the market up in the beginning of January 2024, a year later. And so you can draw these things. And on Japanese, now the thing with Japanese, the only thing I'd say is this: technical analysis, a lot of it comes from Japan. It's the origin of a lot of what we do. In the sense of candlestick charting and various other forms. The people there follow technical analysis much more than in the West. And the other thing to feature is you have to be careful if you do follow some of the Asian ones, because sometimes people set traps for technical analysts like me. They'll set up a pattern and say, okay, here is this pattern. And then they'll set a trap to stop, you exploiting that pattern. The previous patterns are two descending wedge patterns, these lines here, you can see those. Yes. And that break higher, I knew it was going to go up to something like this because of that pattern there.
I see. Wow.
Those things happen, and you can see that from that pattern there is a certain movement, and that's where you go from.
I mean, this is like, to me, I'm not on the technical side, but this is like witchcraft to me. This is, the
amount of times somebody has said that. Oh my! If I had $1 for every time somebody said that, I would be a millionaire. I would. They say it's like witchcraft. Yeah, I've heard that many times.
It's a compliment in a good way, and I hope I might actually give you $1 if I ever go to London. I'll give you that physical dollar. A pound. Let's make it a pound.
Yes, that's one English pound will be fine by me.
Thank you, Eddie. So I guess the last one is that gold has also taken off again and very easily climbed over the $2,100 per ounce threshold. Does the technical imply that there's more momentum left, or even probably being able to push the precious metal to another record high?
Well, you see, this is the issue. I have a previous high which was done in Asia, which a lot of people don't recognize, at 2135 on my chart, and that's what I use. And so 2135, and it happens to be coincidence with this blue line. Now this is an ascending wedge pattern. You can see this blue line. What I've done here is I've extended the upper line through it, Now, yes, we had a break above it, but we only had one close, and then only one close. And it's very important. The minimum of any movement is 2 closes. That's the minimum you need in any movement. And you only had one close above it there and one close above it there. Now, today, that resistance is running through at 21.37 and a half, 21.37 3/4. That's where the resistance is, plus this resistance here at 21.35 and a quarter. What do I think? I think at the moment you had a break of this pattern here, which is a bear channel. We've already reached the primary target for that. There's now going to be a follow-on, but it's going to be slowing down when we get closer to this 21.40 area. And please remember, this moves up every day. You know, next week it's going to start at 21.43. By the end of the week, it will finish at 21.50. So that's where the resistance is. What I can do from there is I can put projections further higher into brand new ground. But I'm not happy to do that yet until we actually have a break above this resistance. So 21.35 to 21.40 is where the resistance is at the moment.
I see. Cool. Wow. So first, you should be able to test that 21.35, then going to push through to the upper band.
If it pushes through, I can give then fresh resistance lines, projections even higher than that. That's one of the things of technical analysis. You can project things into the future based on what's happened in the past. You can actually put Fibonacci projections, for example, going forward. The Fibonacci is an Italian mathematician, but he uses a certain ratio of 38.2 and 61.8 and 50% of any move. And I would do projections, but I'm not happy to do it just yet because we're not close to that resistance at the moment.
Right.
And if we go up there at 21.35 and 21.40 area and then turn round, then I can do projections on the downside as well. I can say, okay, that's what that's looking like. But at the moment, this pattern here, this ascending wedge pattern, this is running the market, and that's the angle it's running it.
Beautiful. Well, that's another pound for you if this goes on to that past that.
I'm not a betting person. I wouldn't do that.
Well, thank you so much for this amazing analysis today, Eddie. But sadly, we're running out of time. We also need to give our traders some time to digest everything you've said, the Gann theory, the Pitchfork, and the ascending wedge pattern. So you know,
I'd only say this. This was the target I put for this pattern here. I drew this when it broke through there. That's about, I think, about a week or so, 2 weeks old, that one there. So it's already reached its target for this pattern, this bear channel.
Oh, wow, look at that. I mean,
that's what it had.
Cool. So yes, that's another
you can
one.
look at you can look at my videos and you can see that sort of thing on there.
Well, we'll also put Eddie's social media channels on the same page, so you guys please do jump into his channel. He's got this and regular content that pushing out on his YouTube channel and other channels. So please do follow Eddie. And you know, we everything we covered so far today is just fabulous. Thank you so much, Eddie, again. We would love to see you again on the show on Executive Talks in the future. And audience, thank you so much for tuning in for Executive Talks from AC Capital Markets. We'll see you again.
Bye-bye.
Bye.
Have a great day.